Good evening. This is Jack Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 29th of December. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing with them for your own charts, and I'm not here to issue trading signals. Right. Okay, let's have a look at ES. Now, ES, obviously, I called this low here. That was all on the pre-market videos, and I posted the I did a post on it as well, and obviously we saw a sharp rally up there, and we've gone a little higher on SPX, but to be honest, it really looks to me as though this is topping out, and we are going to see another lower low. That doesn't need to be an awful lot lower, but we are forming a potential topping pattern here, and I'll talk more about that as we get to the bigger picture charts. In the short term, on Friday morning, I was talking about this little level top here and saying I thought it might well play out. It did. We got down to the monthly pivot area, which was more or less held, saw a bit of a rally. So we've got a choice to make short term, and I'll go through that as we go through the others. Okay, NQ didn't have a pattern here, but nice little decline. On RTY, we haven't actually made an awful long way off the low. Now, we do have a potential inverted head and shoulders here. It's not great, but it's not bad, and that's broken up with a target in the 23.75 area. That may be failing, and if we see a move down below about the 22.38 area, this low here, which we almost reached on Friday, but not quite. But if we see a move below that, I would expect to see a full rejection back down to the low in about the 22.10 area. But as it is, it's still potentially on the table. We could see another leg up. I think the decision is about to get made tomorrow. YM, again, hasn't made an awful long way off the low. We had a little double bottom here. That's made it more or less to the possible near miss target, or at least almost. We may see a little higher as well. We will see. DAX looks like a bear flag forming, and ESTX looks like a bear flag forming. Again, neither of these has got up to the lows. What's the bottom line here? This has been a rally on tech. It hasn't really been a rally on anything else. All right, let's have a look at SPX. Now, SPX, just to mention, on the monthly, I am wondering on the bigger picture whether we might be looking at a year like 2022 here, where we saw a peak in December, and basically we spent a year forming a bull flag and doing a decent retracement. I am wondering whether we might see the same thing next year, and obviously that was like 25% high to low. That was a significant decline. We may well be looking at the same. We've seen about 60% up over the last 2 years. Presidential year has been bullish, as you often expect presidential years to be, but I'm much more doubtful about next year. We're looking at a lot of very rich valuations, and we're also looking at some quite a lot of potential news which is going to be coming through, some of which may well be very market negative. We will see. All right, looking at ES. ES, the rally we saw from the low got us back to the broken backtest of broken support from the August low. This is the wedge that's broken down, and I'm thinking we may well be forming a topping pattern to head lower. Now, we could be failing right here. We backtested the broken support. We also backtested the daily middle band, and so far that has held. We could fail down directly from here. If we do, then I'm thinking we may well be forming a head and shoulders. It would be a pretty nice looking head and shoulders, and in the event that we saw a sustained breakdown, the target would be in about the 55.50 area, which would be, looking at the hourly chart, 55.50 would be between the 50% and the 61.8% retracement. That would be pretty routine for a retracement for a pattern which has gone up this much and has broken down and is doing a bullish retracement. So we will see how that goes. Am I thinking we might see a decline straight out from the start of the year that could just head straight down? Not really. I'd expect to see more of a topping process before then, because the thing is we could do a decline here, come back, retest the high, maybe form a pattern. We will see. But I am very wary about the downside for next year, and I wouldn't be too attached to too many longs next year, I don't think. All right, looking at the 15-minute charts, we've got RSI 14 buy signal fixed. We had a few of those at the low on Friday, and I'm thinking we may well see more upside, and then we will see where it goes from there. All right, Qs. This has got back up to, it went back up over the daily middle band, which wasn't broken with an awful lot of conviction, and basically closed back on it on Friday. We could see a breakdown further from here. It could be A, B, C that we're going to do a lower low directly. We will see how it goes. On the 60-minute chart, we've got an RSI 14 buy signal fix that hasn't made target, and on the 15-minute chart, we've got an RSI 14 buy signal fix that hasn't made target. I am leaning towards seeing sideways to up loosely on Monday and Tuesday this week. At the start of January, well, we'll see how it goes. But it wouldn't surprise me if we started January by doing the next leg down, as I've been talking about. All right, Dire. Dire is nowhere near a move back to the daily middle band. This has barely got off the lows, and the same really is the case with IWM. Do we have some unresolved buy signals? Yes, we do. And I'm leaning towards seeing those sorted out Monday and Tuesday. After that, we'll see how it goes. All right, looking at the others, IWM, not anywhere near. Well, it's barely off the lows really, so we're nowhere near a back test of the daily middle band. If we go back, the other alternative for a topping pattern here. We've got the nice looking head and shoulders, but we could see, as this is a tech rally, possible double tops on both SPX and NDX. And I am wondering if we might see that. That would possibly take Dire and IWM back to the back test of the daily middle band, but after that, I'd still be looking for another leg down. But that would be an alternative for the topping pattern here. But at the moment, I'm wondering if it's got the strength to do that. Really, one thing I was thinking that we might well see a Santa rally which would take us up into a positive December, which at the moment we could still see, but at the moment it's negative and it has not been a great month. And unless we see something pretty spectacular in the next couple of days, it's not really going to be a strong December, whichever way you cut it. I was hoping we might make it up to this trend line here. We're not going to. We might make that the first months of next year. I'm keeping an open mind, but I would think the news flow is going to be interesting next year, and we'll have to see how that goes. All right, let's have a look at IWM again. Hang on. Okay, hourly chart, we've got some unresolved positive divergence. 15-minute chart, really across the board, we've got RSI 14 buy signals fixed that haven't made target yet. Does this look like a bear flag off the lows? Yeah, it does. DAX also looks like a bear flag on the hourly chart, holding below the daily middle band. And a surprising exception is actually the Nikkei, which has actually been doing pretty well. We got over this high here at 40.3. This could be the second high of a double top, but it could be, if we do actually have a reasonably bullish first quarter, let's say, that we could make a retest of this high, all-time high here at 42.4, and I'm wondering if we might do that. I'm a little surprised to see it back at 40.3k now, but given that it's made it back to that high, it could go higher. We shall see. All right, let's have a look at CL. CL, this has just been trading a range for the last couple of months. We broke down from the triangle. It's got a target of 63.57, and until we see strong evidence to the contrary, that's where I'm expecting it to go. NG is a different story. This actually has broken up over some significant resistance. This looks like a bull flag forming. This could just retest this high and then set up a double top and go lower. And we are in a seasonal headwind where we would usually see a low in the February to April area. So we'll see, but we do have a possibility we're breaking up here, which I'll talk more about on the bigger picture chart. All right, let's have a look at those. On natural gas, nothing really to see in terms of divergence. We broke over this declining resistance on NG Feb, but the main thing I'm watching here is the bigger picture chart on the index, and here we are potentially breaking up over a slightly asymmetric double bottom. I'm thinking we might be topping out here short term, head down for the seasonal downturn into early next year, but this is a possibility that we could break up here and consolidate above. We're holding the daily middle band at the moment. No current divergence really worth mention. Possible daily weak RSI 14 sell signal brewing, but mainly I'm thinking we may see a larger retracement from here. I'm no longer thinking we might see a retest of this low here at 1.52. And it's possible, but it just seems unlikely at this stage. CL, long consolidation. We are well below the, hang on 1 second. Actually switch over to WTIC. This is the 50 DMA, which we're above. This is the 200 at about 75.5, which we are well below. And we've been consolidating down here since we broke the triangle at a level which is still very much leaving the next obvious target and the triangle target at 63.57 in range. I'm still thinking this is likely to break down out of this consolidation towards that target. All right, let's have a look at metals. Now, metals isn't complete without a look at USD, which I'll be coming to. But for the moment, this looks like a bear flag forming, and I am wondering about more downside on metals, particularly if the dollar goes up from here, which it might. Silver, kind of flaggy. I've got a much better setup on the daily chart, which I'm coming to. HG, this looks like a little bear flag, and I'm still leaning towards seeing retest this low here at 4.07, and we haven't seen that yet. All right, let's have a look at the metals. Okay, on gold, this could be a bullish triangle forming, but I'm thinking also this could be an ABC, and we could go lower down into maybe 24.50 or 24.75 area and form a bull flag. Silver is looking really interesting here. Now, there's nothing particularly to see on the futures chart, although I have drawn in the possible head and shoulders here, and you can see a much better view and a better quality head and shoulders here. And this is a nice one. Right shoulder high, left shoulder high, pretty well balanced here. Nice head and shoulders, broken down. No highs above the left shoulder at 33.22 on the left-hand side, which is one thing which weakens it in my view. And we've broken down from a head and shoulders here with a target in the 24.1 area. Now, obviously, not all head and shoulders make target. This does have a number of different options here. This could reject, but get back up over 33.33 and then head back up into a retest of this high here at 35.07. But normally with this setup, I would expect it to either head here or to reject back up to the highs. So we're waiting to see which way that's going to go. On palladium, decent looking double bottom if we find some support here. Platinum, decent looking double bottom if we find some support here. On copper, still wondering about a retest of that low. Not seeing anything particularly compelling here, but we've been seeing basically a long compression here. And my lean is this is probably going to break up, but I wouldn't be astounded if it broke down. I mean, certainly I think, Chinese and building isn't looking as solid as it was, obviously. So we'll see how that goes next year, but I'm still leaning towards seeing a break up until demonstration otherwise. Apart from anything else, because I think we're probably going to see more upside on metals as and when the dollar has finished its move up, which may be ending now, but we may have more to go. On GDX, nothing really compelling. This could be a bull flag forming. Same on GDXJ. We've got a bit of positive divergence, but it's not great, and it's suggesting we might go a little lower first on the GDXJ RSI 5. Nothing really on the hourly charts. I am wondering basically about bull flags on both of these. I'm not seeing big reversal patterns forming on either. You could, if you really wanted to, draw head and shoulder patterns on here, but they wouldn't, in my view, be decent head and shoulder patterns. So I wouldn't be paying any attention to them. So it's I like better quality on these things. But we do have some short-term positive divergence, and we've got an hourly RSI 14 buy signal fixed. Sorry, not brewing, it's fixed on the GDXJ chart. All right, let's have a look at bonds and US dollar. Bonds trickling down. On the TNX, I've got a target fairly firm to the upside. I think we might see a rally first, but I'm leaning towards seeing a move down to 104 to 106, and that's really based on a target on TNX I'll be coming to. Looking at US dollar, we've got a potential level top here or part-formed head and shoulders. We could be looking at a reversal here. But I am wondering if it'll go higher. I've been talking about this on the last couple of Bigger Picture webinars, and I'll talk about it again today, so let's have a look at those now. All right, looking at TNX. TNX, I think we can have a very, very interesting year next year. I think we're going to see a retest of this high here at 49.97. We've got a beautiful bull flag that's broken up, and while this could form a larger bull flag, really the target for the bull flag is a retest of this high here at 49.97, and I'm expecting to see that probably sooner rather than later. When we get there, we have a big inflection point. You can see that's the flag there, and we saw a very slight break up over it, and now we've broken up over it with confidence. The bigger picture, if we see that, then we could be forming a double top there and see a big decline. But I think it's more likely that we're going to see some turbulence on the bond markets next year. Apart from anything else, the plans that Congress are talking about and that I think Trump is looking at and what he promised on the campaign trail involves tax cuts and a lot of new spending. That is likely to cause trouble in the bond markets, and trouble in the bond markets tends to get expressed in higher interest rates. Not from the Fed, but from where these things really come from, which is bond yields on TNX and TYX, which are the bond yields for the 10-year and the 30-year, respectively. Looking at TNX here, I've got a possible inverted head and shoulders. It's not great. That's broken up with a target in the 8.1 area. I'm really not expecting, well, I don't think we'll probably see a retest of this low here at 3.98 in our lifetimes, if ever. So this was a major, major low in bond yields. And I think we're probably going to see 8 or 10% within the next few years. The question is whether we might see that this year. And we might. If there is a bond market revolt over spending plans, and there might be, and there has been in other countries, Liz Truss here, when she was elected to the Prime Minister's post, 18 months ago or something, or 2 years. She announced some spending plans. There was a bond market revolt, and she was out of power 3 weeks later. Now, I'm not saying that's going to happen with Trump, but it could make him amend his plans significantly. And a bond market revolt would make it basically put up interest rates and make borrowing for everyone, including very much the government, a lot more expensive. We could well see one of those this year. I've got it penciled down at about a 50% probability that we see some significant financial disruption in the bond markets. That means that when we get up here, we've got an inflection point, and while I would normally be expecting this to be setting up the second high of a double top and probably break down from there, I'm thinking we might actually break up. In which case, I have a target at 8.1, which should be on the 10-year, which would basically be a 10-year yield of 8.1%. And I'm thinking we might see that. That would be fairly dramatic. But actually, this sort of thing happens in other countries. It happened in Britain a couple of years ago. And it can happen in America, which has larger debt in proportion to GDP than Britain does significantly. It's so there, you have to keep the bond market happy. It's been a while since anyone remembered that, but I think they might be remembering it with force this year. We will see. So I'm watching this with enormous interest, and I think this may be one of the most interesting things to watch next year. All right, looking at DX. Possible double top here or part-formed head and shoulders. Don't really have any negative divergence with the mentioned good old RSI 14 sell signal. Could this be a double top? Yes. Could it be failing here? Yes. Could this overall be a bear flag? Yes. Although I don't have a great resistance trend line here. So could this go up and retest this high? Yes, it could. Because we've got this lovely overall rising megaphone, which is coming from the low in 2011. And it's really nice, really from the low in 2008 in effect. But, and I'm expecting to see a test of this here, but what we could do is potentially retest this high, set up a second high of a double top, and then come down and break down from it. Not necessarily making target, and potentially then rejecting back up into the high, but I think I would expect to see this trend line tested. And I've got that currently in the 95 area, but we could go there via 114.75. Now, I'm not seeing any obvious reason to get there, but I've seen some wild retests for no particular reason, and there'll be more reason than most this year. So the news is going to be interesting, the tariffs are going to be interesting, economic policy is going to be interesting, a lot of interesting stuff's going to happen. One of those things could get us back up into that retest. That could set up a beautiful double top, and the next decline in the dollar, which I think will be coming pretty soon after that, we will see. Although as always, there's always the option that it goes the other way. And obviously on the bigger picture, and this is the bigger picture, this is going back to the 1980 area. On the bigger picture, we're still really only half the way back up at 114.75 to where the dollar was before the Plaza Accord in 1985. So potentially this could all be a double bottom and we could break up, but honestly, I'm leaning against that. But you never know. We will see. In the short term, possible double top here. Bit of negative divergence, nothing particularly compelling, but it looks better on the weekly chart. We will see how it goes. But I'll be looking for some retracements soon anyway, because we're looking a bit stretched on the Bollinger Bands. All right, great. Let's have a look at nothing really to see on the currencies short term. So let's have a look at KC. Now, KC, I'm leaning towards seeing a retest of this high in the not too distant future. We've had disruptions in terms of crops. I think there's likely to be a bid under coffee, which could well send it significantly higher, but at the very least, ought to get it back to the retest of this high. We will see how it goes. 60-minute sell signal has reached the possible near miss target. Sugar. Sugar, I'm wondering about lower. This was looking like a messy bull flag consolidation until we saw this decline here. Which really knocked it out of bull flag territory. Now it's looking as though it's bottoming. I've got a 60-minute buy signal fixed. We've got positive divergence on the daily. We've got a nice looking little leveled bottom here. I'm looking for a rally, but I am wondering about lower after that. Looking at CC, nice decline here. This did look like a bull flag forming, but it no longer looks like a bull flag forming. Again, we have gone lower. Could we see a rally short term? Potentially, although I haven't really got any positive divergence for it. Could we have put in a significant high here? Yes, we could. This was really at nosebleed levels up here. So, and it doesn't look, we've come down low enough that it doesn't look like we're going to see a retest to set up any negative divergence. So we will see. All right, CT, potential double bottom here, which I'm watching. More to say about that on the daily chart. On wheat, potential bottoming pattern here, possible IHS, very asymmetric double bottom maybe. I'm leaning towards the bull side here, but again, that probably the dollar has an impact here, so it'll be interesting to see where that goes. Corn, this is looking bullish, and has made a higher high here. Nothing compelling saying it's about to turn. Old 60-minute sell signal on. I have to say, if we didn't already have one fixed, another one would be brewing here. On soy, nice move up, getting up into the declining resistance trend line, which I've got in about 1005 area. And on lumber, we've got an unconvincing rally here. I'm thinking this may well be heading back into a retest of the low soon. Live cattle has broken up. Nice retracement here, and I think this is probably heading back up into a retest of this high here in the 193.2 area. And lean hogs, this looks like a bull flag, which is probably already broken up and probably heads back up into a retest on that too. All right, let's have a look at those on the bigger picture charts on KC. KC, we've got an RSI 14 sell signal, which is brewing. Hasn't fixed yet, but if it does, then that would look bearish. But as I said, it's likely to be a bit under the market. I'm slightly skeptical about seeing more than the retracement here before higher, but we'll see. Sugar, I am wondering if after a rally does look fairly likely here, but after that, I am wondering if we're going to head lower here, and I think we might. On cocoa, we saw a conviction break below the daily middle band on Friday, and that has opened the downside here. We're not going to get any negative divergence on the daily chart. We've actually reached the 30 level on the RSI 5, and we're below the 50 level on the RSI 14. So I'm thinking whatever retracement we need to do here, and it could be a sizable one, and we could have put in a sizable high here. We will see, but I'm thinking we may well just be heading straight down. On wheat, nice looking potential level bottom here, and I'm watching this with great interest. This little wedge here, I'm watching for this to break up, and we're pretty close to resistance, which would be in about the 552 area. On corn, on the bigger picture, you can see this could all be part of a bear flag. So I'm watching this with interest, but we've got the flag set up here. Two, we've got declining resistance in about 464 area, which we haven't broken yet. Waiting to see if we do. On soy, trying to see, getting some bullish looking action here. Need to see a break over this declining resistance in about the 1008 area, and we'll see whether we get any more upside after that. And cotton. Cotton, this is a very nice looking potential nested double bottom. This is the little double bottom on the hourly chart. This is the much larger double bottom on the daily chart. This could be a significant low, but we are a little short on positive divergence. We will see. All right, great. In that case, I think it's a wrap. I'll see you guys on Sunday. All right, cheers.